The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Ken Bloomfield from Financial Clarity. A quiet one today in the Aussie share market with the index moving up just 5 points or 0.1%. The All Orderly's been trading in this band of 5,350 to 5,500 now since the end of the reporting season way back in February, looking for some direction one way or the other, with a little bit of a pause after the budget. If you have a question about shares, our phone lines are open on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. Now, joining me on the panel tonight is Michael Kodari, a regular from Kodari Securities, and Les Shancer. Hope I got that right, the surname there, Les. Thank you. From Paradigm Securities. Welcome to the program. Got a fantastic program tonight, and please send in the questions. We've got plenty of emails as well. And even though there's not much happening on the market today, there's plenty to talk about over the last week or two. So, Michael, I might go to you straight away. Market's been, stuck in this trading band now for quite a while. What do you think's going to push it either up or down out of the trading band?
Ken, I think there's been a lot of interesting news, a lot of negative news maybe. The budget's scared a lot of people, and consumer confidence is low, which is why, retail's had it tough. Yeah. And a lot of fund managers are believing that the market's a bit expensive, so they're selling down your mid caps, and they're actually buying more of the top 50 in the market. So it's a bit of a
safety play.
It is a safety play. So uncertain. This month, I see it as being a very uncertain month within the market. I think there will be sell downs. So the sell down in May we'll see this month. And for me, I'm just looking to buy more quality stocks. So I mean, talking about the retail side, we had Reject Shop again today come out with a second profit downgrade, which is not good. And quite a few of the retailers, downgraded since the budget. Les, is that something that you've been looking at in the market?
Well, as a shopper, as an inveterate buyer, I can tell you one thing. I think retail is doing it really tough. If retail doesn't have a backup on the internet, and I know they all do, but they still compete with people who just are on the internet and specialise in it. Anything I go to buy now, just about anything, I first go to the internet and have a look to see if it's... Because oftentimes you can actually buy something, get it delivered to your apartment or house, cheaper than going out and buying it. So it's not even that you're saving a bit of money, it's the convenience that you don't even have to leave home. You just order it. I mean, I do it all the time.
You can watch a TV show, get on the computer at the same time and bang.
There would not be a week go by that I don't buy myself a present of some sort that is sitting at my concierge.
Very nice of you, buy yourself a present.
Yeah, well, it's sitting at the concierge when I come home. And I don't and it's not that I don't like shopping. I do like shopping. But I just find that the prices that you see in the shops compared to what you can pay for the same items on the internet don't even compute. I mean, you don't mind paying a bit extra, but they don't even compute. And the other thing you were talking about, how things are quiet and et cetera, don't forget, in June there's a lot of tax selling as well. People doing the bed and breakfast, as they call it, buying, selling in June and then maybe buying back in July, but half the time they don't buy back in July, they just say they're going to. So that doesn't help the market either. So I think
it's been a pretty good year, so there have been some profits to actually take some profits.
It's been a pretty good 12 or 18 months, to be honest. It hasn't been spectacular, but good is better than crap, to be honest, right? So that's the alternative. It's either crappy or it's good, and it's been pretty good. But we do have this tax selling regime, and you've got all this news that Michael was talking about as well. None of this bodes well, and yet, you know what usually happens? The opposite of what you think's going to happen.
Market tends to do that to us, doesn't it?
Absolutely. What do they say? Can remain irrational a lot longer than we can remain liquid.
Yeah, indeed, indeed. Thank you, gentlemen. That's a good summary of what's happening out there. Now, we've got a viewer email to kick off tonight. This one is from Addie. She writes, could I have the panel's astute views on Domino's? Michael, you've always got some astute views, so what's your astute view of Domino's?
Look, Domino's is a...
Sorry, I should actually finish off that. As a long-term hold, how much upside do you envisage for this stock?
Look, Domino's is a stock that I've been buying, so it's been one of our main holdings. So the reason why we like Domino's is the management team. We see the CEO being very much stewed in the way he does business. It's very much geared towards growth. They're using modern technology, the apps that you have, social media. It presents about 60% of the business they're actually bringing in.
Is that right?
That's right.
It's gone to that much, has it? Wow.
You know, they're quite clever in terms of picking where technology is heading and how they can utilise it with their own business. Now they're open till 1 a.m, so in the next reporting season, their sales are going to increase. So it's one of those stocks, and their return on equity is about 29.7%, consistently increasing. They got good increase in cash flows, increase in sales, increase in earnings. It's a company that I like. So in this market, if Domino's does drop, I'll be buying more. It's one of the stocks that we hold heavily in our portfolio.
Okay, good. And they're taking on the world as well. Aussie company doing pizzas around the world and doing it very well. That's pretty impressive, isn't it?
I mean, the key is to be very much organised. And in terms of quality, they've fixed a lot of that in the past 5 years. So quality is there in terms of ordering and the ease of ordering and where your order actually is. You know, everything gets tracked now, which I think is amazing. So I think it's a retailer that's doing everything right. And again, it's something that doesn't matter if you go to a recession, we'll still eat pizzas. So you know, it's one of those things that we consume no matter what. If the market was to turn off tomorrow, we'll still be having Domino's pizza.
You might have more.
Especially on Mondays and Tuesdays.
That's
and look,
right.
if the CEO of Domino's is watching, Michael, we'll give you his address and phone number after the show, because he does really like your pizzas. The chart's gone off the screen, but I have to say, it's a nice-looking chart. Of course, there's a little bit of consolidation. Nothing goes up in a straight line, or if it does, it tends to come back down in a straight line. There it is there. Look, it's got a really nice... You put a line from the bottom to the bottom of that increase. So you see it's a lovely trend that goes up. And of course there's a bit of consolidation, like I said, because people take profit or they stop eating pizza, whatever. But I quite like that chart. And, you know, is it going to keep going up? Well, if people keep buying pizzas, and you know what? If Michael's dead right, I'm not a big pizza eater, but I do have the odd Domino's, especially if I'm walking past and it's on a Tuesday and I'm feeling hungry and I can't bother making any dinner. It's as cheap as chips. I had some people for dinner the other day. It cost $10 for 2 great big pizzas. I mean, we couldn't finish them. You know, where do you get $10 and you feed 3 people?
Well,
so as long as they keep coming up with innovative ideas, I think it's a great stock, and I couldn't see any reason why it wouldn't keep going higher.
Good, okay. There you go, Addy. That should help. You're obviously a holder in the stock at the moment. Some good positive comments for the future. Now, we've got a caller, Alan from Newcastle. Alan, how can we help you tonight?
Yeah, good evening, Ken and gentlemen. A call concerns Virtus Health, VRT, and Flight Centre, FLT. Virtus has been trending well and truly upwards in the last several months, and lately Flight Centre's been going in the opposite direction. Your comments, please.
Fantastic. Thank you, Alan. So, Michael, is Virtus stock that you follow, or Flight Centre?
Look, Virtus is one of those companies in terms of it's fairly new. There's not much track history on it. Return on equity is about 4.7%. So you know, if
low at the moment.
It's quite low. Yeah. So you know, when you look at the business, if it's around 4%, you can put your money in a bank rather than invest it and risk it in a company like this. It's in the healthcare sector. It's done really well, but it doesn't have the track history for us to invest in it yet. Okay. But Flight Centre is a company that we very much liked. And we invest in. It's done fairly well. There's a couple of things that the Flight Centre chart fluctuates with: Australian dollar, consumer confidence. You know, so it comes back to the main consumer at the end of the day. So if they're happy, you know, if they think the economy is great, if the dollar's low, they're travelling more. You know, all that sort of stuff makes a company like that. The other thing also is the management team. So one of the key things with management is they do like to expand to hotels and to different industries, which is a bit of a risk. So, you know, long-term...
Yeah, very entrepreneurial group, aren't they?
Yeah.
Flight Centre,
So, you know, it's a business that's done extremely well. The model is great. But, you know, short-term, you know, it's had a drop in price. But then again, you know, if you need to book a flight, it's one of those websites a lot of people go to.
Yeah, it's one of the standards, isn't it?
Yeah.
And Les, Flight Centre...
Looking at that chart, you can see it's coming back down to a pretty strong support line. Well, there's not a line there, but you can visualise the line. You can see it there at around the 4.5. I think it'll be interesting to see what happens over the next few days, next week or so. If it falls through that, then, you know, it could continue right down towards that bottom figure down there. And if it holds that line and bounces off it, well, then it's got the potential to go back up to that upper level again. So I think, look, it's a good company. It makes money, but I think from a trading point of view, it's in a very interesting situation.
Right.
I would wait, I think,
Right,
just
good.
to see what's going to happen over the next short time.
Fantastic. Thank you for those sage words. Let's take a break, but don't go away. Call us on 1300 30 34 35, or if you're shy, you can email us on yourmoney@skynews.com.au. We'll be back in just a moment. Welcome back to the Shares edition of Your Money, Your Call. I'm Ken Bloomfield from Financial Clarity. On our expert panel tonight is Michael Kodari from Kodari Securities and Les Shancer from Paradigm Securities. If you have a question, we'd love to hear from you. Give us a call, 1300 30 34 35, or drop us an email, yourmoney@skynews.com.au. Now we have a caller, John from Manja in WA. John, it's nice to have a West Aussie calling. How can we help you tonight?
I was just reading about the Henderson Group. I read their annual report, and they've increased their dividends by for the year by 12%, and they're holding a fair bit of cash, over £231 million, I think. The Aussie dollar may be sort of heading south. They seem to be invested fairly well internationally and in Australia. What do you think about buying them at these levels? They seem to be quite aggressive.
Yeah, good, John. Great question, Henderson's. Henderson's actually a stock that we own for our clients, so we know them pretty well. Love the story. They're an international fund manager, and they're very diversified, so they're not reliant just on one specific sector of the market. So in shares, in bonds, in multi-asset funds as well. They seem like they have acquired a lot of the very good fund managers from around the place in Europe over the last 3 or 4 years as well in terms of acquisitions. So they look excellent from our perspective. But I won't steal any thunder there from you, Michael. I know that this is a stock that you follow as well.
Yeah, no, look, Henderson Group's an interesting company. You know, they operate a lot within the European region. They're acquiring a lot of funds management firms. The key here is, you know, their return on equity is consistently in the past 3 years increasing, cash flow, sales. It's a good company. So, you know, it's one of those stocks that fundamentally it's sound.
Yep.
And it's up another 2.24% today. So, yeah, it's a company that I do like.
Good. Yeah, thanks, Michael. And Les, what do you think of the chart
Again,
there?
I think it's a good
going in the right
chart.
direction,
There's
isn't it?
absolutely nothing wrong with a little bit of consolidation or a little bit of sideways movement, because I always get worried when a chart goes straight up, because it tends to go straight down again. It's got a very nice upward trend, and if they've got all that kind of money, they should come round to my apartment. We should play poker.
Okay. And I think the other thing to say about Henderson's, John, is that they really rely on being one of the top fund managers on a regular basis. So one of the great tests if you're buying into a fund management organisation is to look at their 1, 2, 3 year performance. And Henderson's, I think the last time we looked, I think they were in the first quartile, top 25% of their sector in every one of their funds, or not every one of their funds, but in their sectors for about 80% of their funds, and that's very impressive. So they should have a little bit of inflow, which will help their profits in the future. Now, we're going to Bernard from the Gold Coast. Bernard, how can we help you tonight?
Yeah, thanks, gentlemen. Just a quick one. I follow CSR quite a bit. I was in on at $2 and they went up to about $3.80. I think I was lucky enough to get it about $3.72, I think. Just been watching stock the last couple of weeks. It seems to have pulled quite back a little bit, down around the $3.28, $3.30 mark, and seems to be sort of going sideways a bit. And I've noticed the sellers in the morning and buyers back in the afternoon. So is this a stock that you would get back in again for a bit of another run, or is it something I should steer clear of, please?
Yeah, good, Bernard. Look, thanks for the call. I think, you know, CSR had a fantastic run, Michael, on the back of the building material sector and the dwellings commencements improving a lot, you know, late last year, early this year. They seem to get in front of themselves, and it looks like that whole sector's pulling back. a little bit. How do you feel about CSR?
And one of the key things is building approvals have dropped, and that's why a lot of these companies that are, I guess, reliant upon building approvals, tend to lose business as well. So,
but they've dropped from a very high level, haven't they? Because they screamed upwards there for a year or so. It just seems like it's slowing down a little bit now, but it's still at a high level.
Yeah, look, property market is, last month we had the worst month in 5 to 6 years. So, property is sort of slowing down, and, it's all related upon building approvals and sentiment, and, this company is, directly in correlation with, that itself. So, it's a stock that I wouldn't invest in at this stage. There's a lot more companies to look into, and in terms of what return on equity it actually gives me, it's not as strong. There's more companies that can give me a return on equity above 12% that I can put my money in.
Yeah, so very cyclical stock, and cyclical stocks pretty hard to read, aren't they, in terms of their their valuations compared to, say, the Hendersons and those less cyclical stocks. Les, how do you feel about CSR?
Well, it's funny, we're having a day where all the charts are almost identical. I mean, we usually get, the RCLCs, the really crappy-looking charts, and I'm sure they're to come. But every chart we've looked at has had a nice upward trend.
Yeah, the viewers are doing well tonight, aren't they?
I would just be a little wary of, if you can see where that, it's, instead of rather just having a decent long sideways move, it's sort of piped up and then piped back down again, and it looks like it's trying to kick on. Now, if it doesn't kick on from that level there and starts to fall, there's not a lot to help it on the way down. So, again, I will be just very, very wary. If I was going to buy that stock, and it's not a stock that I particularly like, but that's just my opinion, and I'm not a big person for stop losses, being an option trader, but I would certainly, if I bought it, be putting a fairly strong stop loss under it, because I just think you can see it's trying to fall, then it's had a little bit of relief, which sometimes is false relief, and if it falls through that little bit of support, there's not much on the way down. It's all sort of squiggly. There's no strong support on the way down.
So you'd like to see it holding that sort of 320, 330?
I'd like to see it kick on there, and if it can go back above that high you can see, then you know. I know you say, oh well, you're getting in a bit later, but you're getting in when the stock is strong. So you could take a punt now and maybe just use a strong stop loss, or just wait a little while and see what's going to happen.
Good. And building materials generally, any other stocks that you like, Michael? Or
it's very, in this sort of sector, in the property sort of sector, we looked at it about 6 months ago, and we started buying a lot, and we sold in the past 2 months. I mean, Adelaide Brighton was a company we invested in.
Right,
So we fundamentally ticked all our boxes, but at this stage, we're moving away from the property and the building sector because of the building approvals. So in a sense, if you are to look at investing in a sector, you've got to do your homework and look at the macroeconomics and the figures that are coming out, which will directly influence companies within that industry and sector too.
So just pausing and waiting to see in the next couple of months whether that kicks back.
Yeah, look, it will eventually. This is a short-term thing. Interest rates being at 2.5%, long-term property will tend to do good, but it's had such a good run in the past 6 months. So it's a short-term slowdown, and that's what we're seeing.
Thanks, Michael. Excellent. Now we're taking a short break. In the meantime, give us a call on 1300 30 34 35. We'll be back to answer more of your questions shortly. Welcome back to Your Money, Your Call. We've had some great questions so far about shares, so if you want to join the conversation, phone lines are open on 1300 30 34 35, or if you're a little bit shy, email us yourmoney@skynews.com.au. Not only have we had some good calls, we've had some good charts as well, gentlemen, tonight.
Excellent.
It's very nice, isn't it?
Excellent.
Now we've got caller Michael from Sydney. Michael, how can we help you tonight?
Good evening to the panel there.
Good evening.
There's two parts to my question. First part of the question is, what does the panel know about two particular stocks, TYK, Tai-Chin Resources?
Tai-Chin Resources, right.
And the second one, code CDB, Condor Blanco.
Condor Blanco.
And second part of the question, if I can direct this to Les, is he still feel bullish towards Lambu Resources?
Okay, fantastic.
3 questions.
So the 3 questions, yeah, thank you, Michael. So we'll go straight to Les to answer the 3 questions.
Well, look, we need to get Condor Blanco out of the road, I guess. They made an announcement today. They've been in suspension for a week or two. I can't remember exactly how long. They made an announcement today that the funding that that they thought they had guaranteed and everyone else thought they had guaranteed, including my good self, has not come about, and as a result of which the coking coal project, which was going to be funded by some of that money that was coming in, is now null and void. Now, that could create a lot of fear and drama in the market. I would just point out one thing, and that is the funding was to get involved into a coking coal project, which would have been great if they did. I mean, I'm an investor and I would have been very happy if they did get that project because it sounded like a great project. However, they still do have the same projects in Chile they had before, and in fact I know that the MD is over in Chile at the moment doing an audit and updating the licences and all the different things you need to have the leaseholds, etc., to get their main project over there, which is the Marielinas iron ore tailings project, and they're still going. And I mean, they're still there. Their projects in Chile are still there. What the disappointment is, of course, is that they don't pick up this or get involved in what could have been a really major coking coal project. Now, I know they are still seeking finance. They do have money in the bank. They're not going to close down tomorrow, as someone rang me and asked me if that was going to happen. No, that's not going to happen. They do have money in the bank, but they are seeking finance not to get into the coking coal project, that's a dead duck, but there are other projects around, and to get the Marielinas iron ore tailings project up and running. So the news is not the news we want to hear, but it's not, I believe it's not the end of the world, and as an investor I still have you know, confidence that things will work out in the long run to the betterment.
Okay, good.
And also, can I just finish with that?
Sure,
because I know there's a lot of people who have emailed me and texted me and rung me and probably knocked on my door. No, they haven't knocked on my door yet, who want to know what's going on, and that is that the announcement was made so that they obviously don't want to stay suspended. So the announcement was made so that they are now a hell of a lot of steps closer to being unsuspended. They've got a few more questions to answer to the ASX, and once those questions are answered satisfactorily, they will be back trading again.
Okay.
So they will be trading again.
Next few days.
Is my understanding.
Okay, fantastic. Thank you for that. And Tai Chi? No,
it was Lambu.
Lambu, sorry, Lambu.
I started recommending Lambu last November when it was about 6 cents. Didn't have the sense to buy any, but I'm a trader, but I started recommending it at 6 cents. It went as high as 90 odd cents. Today it's 77 cents, and I can be quite honest with you, I was a buyer at 76 cents a few weeks ago. So in answer to your question, am I bullish? Well, I didn't buy it at 6 and I bought it at 76, so I'm very bullish. Graphite is going to be the next oil, gas, gold, uranium, the whole box and dice. They're really, if you go and read about graphene and flake graphite, the potential of those products is seriously mind-boggling. You need to go to either the websites that do graphite or go and just put graphite, flake graphite and graphene into Google. You'll be amazed at what's happening with those products and what's going to happen. Right,
and there's a couple of graphite stocks, aren't there, in Australia, as well as Lambu?
Yeah, there's a number of
the better.
Well, Lambu's the one that, you know, someone actually had to push me about 4 times to go and actually research it, because when they said graphite, I said, there's this stuff about graphite. But then when I actually got to meet the MD of Lambu, and he explained to me what flake graphite does and what graphene, which is 100 of 1/10, one molecule of 110,000 molecules, of what it can do, and the fact that they've got thousands of scientists working on making this thing commercial. It's just, seriously, like I said, I can't tell you enough because I'm not clever enough. Go and read about it. The things that they can do and they're going to do with graphite and graphene are mind-boggling. Right. Absolutely mind-boggling. Okay, and Lambu's not the only company. Yeah. It's the one that I happen to know best.
Yeah, so definitely worth a look.
I'm definitely bullish Lambu.
Fantastic. Now, Tai Chi, and looks a pretty small stock, Michael.
Yeah, there are small there. You know, we're more in the top 300, but you're more of a growth stock. So, yeah.
So not one you follow?
No, none of this.
No, and I must say it's not one that I follow either. Now, there was some bit of an update there from the reject shop today, which we mentioned before, and it's just showing how tough it is out there in retail land, which we spoke about. But are there any retailers at all that you guys are looking at the moment, or do you think a structurally impaired industry with short-term problems as well from the budget is just one to stay away from?
There's always boutique little businesses that seem to do very, very well. And You know, I'm trying to think of one that comes to mind that's not just a one-off little shop, because a one-off little shop isn't really going to help our investors.
Yep.
But seriously, the way that the
Okay, well, we'll come back to that actually after the break. We'll take more questions after the break. If you'd like to speak with us, 1300 30 34 35. Welcome back to the program. I'm Ken Bloomfield from Financial Clarity. Joining me on the panel tonight is Michael Kodari from Kodari Securities and Les Shancer from Paradigm Securities. If you've got a question, please call us 1300 30 34 35. We've got plenty of time before the end of the show. Now, let's just go back and talk about that retail for a minute. I cut you off mid-sentence there, Les. But,
sorry, I used to be married. Yeah. Look, I live in the city and I work in the city, so I do spend time in the various department stores in the city, and I must say that you can walk through a department store and quite literally and walk slowly and give people a chance to come up and say, "G'day, you know, anything we can do for you?" And literally you can walk for 15, 20 minutes and no one will come and see you. And the reason for that is not because they necessarily don't want to serve you, but the way I think these retailers are keeping themselves in business is cutting costs. And one of the ways they cut costs is, unfortunately, they cut staff. And when you cut staff, you cut service. And if you're going to cut service, the one thing you don't get on the internet, unless they have a live chat thing, is interaction. Even most of them have got a live chat thing anyway, or you can ring up. But you don't get interaction. You see a product, you like the price, you like the postage, you order it, it comes to your house, nice and convenient. But if you're going to go into a department store and not get chatted up by somebody and have an experience, then you might as well buy it on the bloody internet. Because there's got to be a point of difference. I used to be a retailer, I used to run retail shopping centres for a long time. You know, there's got to be, I used to say to the retailers, you've got to have a point of difference. There's a hell of a lot of shops out there, a lot of them are the same as yours. If you're not going to be any different, it's just pot luck who goes in your shop. Do something different. You know, be different. And if they're going to keep cutting staff to cut costs, cut something else, you know, like have the lights a little bit dimmer or whatever, but they'll probably do that too. But if you're going to cut the staff, which is where the service is, which is where your money is coming into your store, that's always, I think, a prediction for disaster. Yeah, it's as simple as that.
It's interesting, isn't it? I mean, we had a question last time I was on the show about Myer, and I just told the client, you know, the person calling to stay away from it, because it smells a little bit like the newspaper industry 5 or 6 years ago, doesn't it? The retail,
absolutely,
you know, the department store industry, and we don't have as much internet penetration in Australia as they do in UK. They've got about double the internet penetration in terms of retailing and shopping online. So if we got to that point, it'd be a very, very tough gig for the retailers.
It's almost sterile walking into a department store now. You know, it's not a. You get the odd good salesperson, but generally it's not a. Oh, I had a good experience in there, and I really enjoyed shopping. If you go in there, and you're going to get something, you quickly get it if you can get served. Yeah. And sometimes you've actually got to. If it's a small item like an electrical item, you've got to sort of pick it up and take it over to the counter.
Try to find someone.
Yeah, well, you've got to go to the counter where they take the money. Yeah. You'd like someone to actually come and
please come and take my money, I want to pay you.
Exactly.
Yeah. The other thing, Ken, I was going to say is this brings back the whole Westfield model, which is now, 20, 30 years ago when Frank Lowe saw it and thought this is a great idea. Yeah. With the conditions retail are at now, it's not going to work. So it's a good stock to short.
Yeah,
so
totally
if you look at the demographic and the macroeconomics, the model doesn't work as well.
They're in the right place at the right time, and it's now no longer the right place at the right time. And that's why they're trying to split it up and do things.
Or, one of these big international chains. And if you look at the stores now, it's all full of the international chains because they can afford the rent and they can afford to carry when it's quiet. But
the companies like the Reject Shop, who came out with their profit downgrade today, one of the main reason they cited, apart from the short-term issues such as the budget, was actually just that they're paying too much rent and they're going to review it. Now we need to go to another caller. We've got another Michael from Sydney. That's 2 in a row. Michael, how can we help you?
Yes, good evening, Ken and panel. Thank you very much for taking my call.
Pleasure.
Lots of Michael on the phone tonight.
Yeah, I'll flick your question to Michael as well.
Yeah, okay. Look, I held MTU and IINet for a long time, and I decided to exit one of them. I decided on IINet about 12 months ago, and I think it's probably price-wise outperformed MTU, but I stick with that one. Right. Now, there's a lot of companies in this space like AAM, IINet, TPG, etc. Do you see any consolidation here likely, and what do you think of the prospects of MTU going forward? And And just as a corollary, if you have time, I've been in the market about 3 years since I retired, and I'm up percentage-wise before dividends, which is okay. But I look back on it now in retrospect and think I should have been perhaps in the top 20. Just put a basket together in the top 20 and forgot about it, and I probably would have done better.
Yeah.
What's happening to our market? We used to follow Wall Street once, and now it just doesn't mean anything.
Yeah, good, Michael. Okay, there's two quite distinct questions there, and they're both good ones. So let's tackle the first one first, telecommunications and MTU. Now, I know, Michael, you've been in a number of telecommunications stocks last few years, done very well for your clients out of it. Which ones are you in at the moment, and what are your comments on MTU?
Ken, I think, first of all, to Michael, the market, it's a sideways market. So, yes, if you bought and held, the top 20 or 50 in the past year or two, you would have done really well. I guess it's all about knowing the right opportunity to pick. Now, in the telco sector, MTU is a good stock, but our favourite and our best pick was TPG Telecom. So we recommended that stock throughout the entire year, last year and this year, and it's gone up in excess of 120%. And the key to it is, first of all, the management team. They're very aggressive in terms of acquiring other businesses. It's got great cash flow. Its return on equity consistently increases. It's a good business. They market themselves very well, and they're very much competitive. Their cost is very low compared to the competitors. Yes. So, we like TPG Telecom. MTU is a good business, but, TPG Telecom is a stock we actually hold, and, we did very well from. But it's about, I guess, knowing when to buy, when to sell, getting into the right sectors at the right time. At this stage, telco is sort of, it's going sideways. So it's about knowing... Yeah, I mean, that's right. Being a good money manager is to know how to move your money around from one place to the next and react to announcements or, the macroeconomic indicators that come out. So, you can make a lot of money in the stock market, but you've got to get the right advice. And I guess that's why, I'm here with you guys tonight.
Can I see you later?
Or can I give you a free consultation.
From a timing perspective then, Les, what's your view on MTU? I don't know if we've got a chart there for
We
MTU.
did have a chart, and there we go.
Very choppy, isn't it?
It's not a very exciting looking chart, to be honest, and if you're in it, you'd probably, if you're a nervous character, you'd probably feel a bit nervous because it bounces around a lot. I'll tell you why it's a confusing chart. If you look at that little mini double top there, right at the end there, it's actually a lower high, but a higher low, which tells you nothing. I mean, we want to have higher highs and higher lows, or lower highs and lower lows, because at least that gives us some sense of direction.
So investors are confused.
It's not really telling us a lot. And if you go back and look at go backwards, we'll do it the Chinese and Jewish way. We'll go from the wrong side to the other side. You'll see that the chart is actually, again, a very, very choppy chart. So I would say, look, I don't follow the company. I don't really follow telecommunications that much, although I do like TPG. I think it's a good company, and they've made some good acquisitions in the not too far past. But to me, if you're going to own that stock, you're in for a bit of a rough ride. So because it's not keeping any sort of momentum in any natural, comfortable way. So it's not a stock I would own simply because I don't want to wake up one morning and it's down here and wake up the next day and it's down up here and wake up the next morning and it's down here. I mean, there are easier, more comfortable ways to trade. And like Michael said, TPG is a very strong company. I don't mind iiNet either. I think that's not a bad company either. I like those because they're more nimble than your Telstras, although that's a good dividend company, and your Optuses and your Vodafones. They're more nimble. And TPG is actually quite big, and iiNet's got quite big now too. But they still are more nimble when it comes to changing packages and doing things that are innovative in the marketplace.
Good, okay. Well, Michael, there's two comments on MTU, and the only thing I'd add to that is that I wasn't impressed with the quality of their last result, and I wasn't particularly impressed with the corporate governance in their last result as well with MTU. So that's one that I certainly wouldn't be going near with my clients at the moment. Amcom, I think, is a stock worth looking at if you are looking also for a stock in that sector. We might just talk after the break. We're going to a break now, but we might just talk after the break a little bit about the market compared to the US market. So sit tight, give us a call on 1300 30 34 35, and we'll be back soon.
On ever since.
Welcome back to the Shares edition of Your Money, Your Call. If you have a question you'd like answered, pick up the phone, give us a call. The number's 1300 30 34 35, or email us on or at yourmoney@skynews.com.au. Now, we might actually just touch on that question that Michael asked before about why is the Australian market doing poorly compared to overseas market. I know you had a go at that, Michael. Do you want to have a go, Les? Do you think there's any particular reason?
Well, I think when it comes to trading, Australian people are not as enthusiastic, or maybe that's the wrong word, not as confident about what's going on as are in America. Because, look, in America, they'll throw the bath and the basin and the baby and everything at the market to keep it going, and they'll do whatever it takes to keep the market going up. And sometimes, no matter what they do, it falls over, like 2007 and onwards. But I think in America, people are a lot more optimistic, right, because of all the things that go on in America, and I think they're more likely to trade. And I think you'll find people like me do a lot of trading in America, on the American market as well. I'm not saying I cause the difference in the prices, but I wouldn't be the only person who goes, wow, there's a world of 10,000 stocks out there with plenty of liquidity. Why am I mucking around in the Australian market? Although we still do trade during the day, we do trade the Australian market. It's just at night time I tend to trade the American market. But I don't know the exact answer because I don't know if anyone does. I just don't think we have the same confidence that the people who trade or maybe we don't believe the stories that you see on a lot of the investing programs that tend to build up, you know, that the world is rosy and everything's going to be great. Look, I don't think the world is bad. I think potentially we could be in for a good time. Yeah, we'll get the odd correction, but that's life. I mean, you have corrections. Don't have corrections, no one will ever sell. And they'll just keep holding on if it's going to keep going up every day. We need corrections to keep the market going. But I just think we don't have the same mindset that they do in places like America.
Yeah, and I guess the other thing is the market here has been very driven, as Michael said, by the top 50. And, you know, why not just put your money in there and leave and come back a few years later? But
well,
it's been
an unusual... 2007.
Yeah, but it's been an unusual time, hasn't it, last 18 months? Because as interest rates came down, a lot of those top 20 stocks anyway are either the banks or Telstra, very high-yielding stocks, very safe, and people really just rushed into those stocks. So I think it's a bit of an unusual period. And I think that's now sort of normalising. So I think that you should see the mid-caps, some good mid-caps, and some of the smaller, well-managed companies actually do pretty well in the next little while, I'd say.
Well, a lot of money has not gone into the small miners, which is an area that at Paradigm we specialise in. I mean, they've been hammered left, right and centre, and a lot of them have got fantastic potential. They just need some funds to get that potential out.
But it might be a while now with the miners,
Could be, but I think they're getting ready where there's a potential that that's going to start happening.
Good. Okay, thanks, Les. Now we've got Jim calling, talk about miners. We've got Jim calling from Perth. Jim, how can we help you?
Yes, good evening, gentlemen. Probably the question would be to Les. It's in regards to PRR Primer Biomed. I know Les recommended it a while back, so I did buy some, but just wondering whether he would be buying more of that stock and what his, what he thinks of the stock in the future. It's got $26.5 million in cash, led by Lucy Turnbull, also pretty good management. Just wanted to get Les's opinion, what his thoughts are, and probably a technical view as well, if that's possible. Thank you.
You just took all my thunder. You gave all the things I know about it. Look, the one thing about Prima is, unlike a lot of small biomed companies, it's always, well, since it kicked on again from almost oblivion, it's always been well funded. It's always managed to raise money. It's had a few boutique fund managers in America funding it, and so it's always had money. And something interesting about Prima, and I don't know where the share price is going. I do still own it. I've owned it for ever and a day. But interesting thing about Prima is that they do trials on treatments for ovarian cancer. All right, that's what they're known for. And I remember being at a lunch a long, long time ago with the then MD, and I said, if it's this good, why can't you use it on other cancers? And he said, well, we can, but you've got to do a trial on every single cancer that you suddenly say you think you've got a treatment for. And they're very, as people who have been in it will know, it's very long, it's laborious, it's costly, and it just seems to go forever, although Prima's very close to getting to commercialisation of the ovarian cancer treatment. However, they are now starting to do trials in other cancers. What this will do ultimately, if we live long enough, it's going to then open up markets where there is more potential to sell their products, and then obviously this is what they're in business for. They're in business to treat cancer, but they're also in business to make money. So what they're doing is they're widening the net, because they are now getting into, I think it's colorectal, I don't know how to pronounce it, breast cancer and a few other ones that they are now starting to do trials in. And every time, being an investor, I get my monthly report. They've been approved in another place in the world to commercialise or whatever. But the big market is America. That's where the money is. They've done very well overseas, but once they get the commercialisation, the FDA gives the approval and they start selling in America, I would be really surprised if this stock didn't go well. I'm not selling mine. Am I going to buy any more? Depends. If it comes down a bit more, I may, but I'm not desperate to, but I'm certainly not desperate to sell what I hold.
Good, fantastic. Thank you, Les. I hope that helps. I think some of the other stocks in that healthcare sector, I mean, ResMed just came out with a bit of a clarification of the mix of their sales, which I thought was very impressive. In the USA, ResMed is getting involved in home testing. Yep. And, of course, home testing is becoming a bigger part of the market, and the authorities like it because it costs $200 for a home test, whereas if someone goes in overnight, it costs $1,700. So they're encouraging that. And that was a very interesting announcement, because it means that their higher-end products are getting sold at a better price. So that's certainly one to watch. Is there any other in the healthcare sector?
I've got a couple.
We need a quick few names and we can talk about them after.
Okay, yeah. SRX, Certex, which
yep.
is a treatment for liver cancer and does radiation, but unlike normal radiation, which is day in, day out, week in, week out, it has a delivery system that delivers 1 centimetre of radiation into your body. It's a once-off treatment, and that lasts for 3 months. And it is currently in the ASX 200. It pays a dividend. It's about just under $17. I was reading a report on it the other day that one of the research companies says they've got a midpoint of $21 on the stock.
Yeah, very exciting, isn't it, Certex?
It's the treatment. You know, liver cancer all cancers are bad, and I've had family and friends die of it, and I can tell you it is shocking. But liver cancer is also very, very bad. And if you can have a treatment that you can have a once-off treatment that lasts for 3 months, it doesn't disrupt your life like chemo for 6 weeks at a time, 5 days a week. And its sister company, Oncosil, has a similar treatment but a slightly different delivery system, which is for pancreatic cancer, which is supposed to be the worst cancer of all the cancers. Again, you don't damage all the cells because you're doing 1 centimetre of radiation. You're not just bombarding the whole body. And that's trading at 11 cents. Now, when that gets to this level that SRX gets to, Certex, the upside is just phenomenal.
Okay, well, there are a few interesting ones in the healthcare sector. Time for a short break, but while we're away, don't miss out. Call us on 1300 30 34 35 or email us yourmoney@skynews.com.au. We'll be back with more of your calls after the break. Welcome back to the program. Well, it's been a great show this evening, but we still have time for a few last-minute questions. Call us on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. Go straight to John from Maitland. John, how can we help you tonight?
Oh, hi guys. Thanks for taking my call.
My pleasure.
Love your show. And I just had a query about Australian Worldwide Exploration, AWE. Just wanted to get the panel's thoughts on that stock.
Fantastic. Now, Michael, is AWE one that you follow?
Look, the chart's done extremely well. Fundamentally, it doesn't make much money. It's not on the top of my list of stocks to buy, but I think at this stage at $1.83.5, it is very expensive. My valuation for this company would be around the $1.60 mark. So I think it's had a very good run.
Okay, so not one you're looking at the moment. No. And Les, do you like that chart? It's sort of taken off recently, hasn't it?
I'd only be a little bit wary that it doesn't seem to have taken much of a breath in the last few days. And usually what happens is people do the right thing and take some profit. Yeah. So it might come off a bit. But if it came down to around that 1.6 level and stayed there and held it, I think that's the level you're talking about. If it came back down there and held it, then it's got potential to go up. But I mean, you can't knock the chart; it's in the right direction.
Right.
Been a very good chart night tonight.
Maybe just it has been a good chart night. A lot of left to right going up.
Yeah, very good.
It's nice, but it looks a bit overextended. Do you think? Maybe in the short term.
Yes, just a tad.
No need to rush in.
No need.
Good. And in that whole sector, the oil and gas sector, we've had some fantastic news from Oil Search in the last month or two. Any other stocks in particular that you like?
Well, last time I was on, which was only a couple of weeks ago, I was asked by Mark McCarthy if I could run off a number of stocks in the mining industry, not necessarily gas. And I did mention one called LNG, liquefied natural gas, and it was trading at around about 50 cents. Now, on Friday, it went to as high as $1.67. That's in like 2-3 weeks. Whenever I was on the last time. And it did come off because people just jumped in and took their profit, obviously, and it came back today to about $1.25. But it's still more than double what it was when I recommended it. I still think it's got a lot of legs, and I still think maybe as it comes down, I bought some and I sold it, and I'm now looking to get back in again if I think it's going to level off at around that level. If it comes off a little bit more, well, all the better. But I think LNG, if those that followed it, I'll give you my address, you know where to send the cheques, okay?
Excellent. And Michael, quick one. Any other stocks?
Look, for us, it's, our portfolio is companies like Domino's Pizza we really like, Certex, ResMeds, in the retail sector, JB Hi-Fi we like. So, we've got a portfolio of, I guess, stocks in the top 300 that we are buying in at this stage. So we like the market this month. This allows us to get back in again.
Okay, good. So bit patient, opportunity to get some more stocks. Okay.
There's always another day.
Yeah, indeed, there always is in the share market. That's unfortunately all we have time for today, but thanks so much to our guests, Michael Kodari from Kodari Securities and Les Shancer from Paradigm Securities. And of course, a huge thanks to you, all our viewers, for all of your calls and emails. Until next time, Ken Bloomfield from Financial Clarity. Have a great night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.